If anyone thought that the removal of Brexit uncertainty was going to pave the way for lower volatility in the pound, then they were sadly mistaken and very much underestimating the desire of the Bank of England to come back to the fore in the aftermath of the UK general election. Now, I think many people assumed that the Bank of England was going to be relatively quiet, especially over the next few months, even potentially over the course of this year, potentially considering one rate cut, although we have to remember that not long ago it was interest rate hikes that interested the Bank of England, not interest rate cuts. But that's very much changed over the course of this week. Not only have we had a batch of weak economic data, be that manufacturing and industrial production, the GDP monthly reading for November, or even as early as this morning, weaker inflation data, but we've also had various policymakers sounding the alarm over an interest rate cut. We've had two policymakers suggest that if the data does not improve in the near term, then they would favour a rate cut at one of the upcoming meetings. This comes on top of two other policymakers who have already voted for an interest rate cut at previous meetings. Now, what I find most surprising with this entire situation, quite frankly, is that we're looking at economic data for the November period. Now, we have to remember this is a period in which we had enormous political uncertainty ahead of the general election in December. We had enormous Brexit uncertainty ahead of that deadline, and therefore taking a measure of the UK economy at that point in time is like taking a health check for your average person in January. It's not necessarily going to give you the best reflection of the health of the economy, or of course the person in the case of the analogy. So I find it quite strange that people are reading quite so much into some of the economic data that we have seen, and more so that we are seeing policymakers jump on the back of that to potentially throw their support behind an interest rate cut. You have to ask two questions as far as I'm concerned. One is, what kind of an impact is a single 25 basis point cut going to have on the fortunes of the UK economy? I would argue very little. The other question you have to ask is, why is it that they are now throwing the support behind an interest rate cut rather than waiting a few months to see if the fortunes of the UK economy improve with the removal of a certain element of the Brexit uncertainty and with the political uncertainty having passed as well? It seems very interesting, but it does make for a very interesting Bank of England meeting at the end of this month. At this moment in time, the pound is falling ever so slightly. We've seen over the last few days it has come under a little bit of pressure. As you can see on the chart against the US dollar, it's 130 that's coming under pressure. Now, this is a level that was easily taken out during the latter stages of the election campaign. Once it became clear that the Conservatives were heading for a majority, and especially once the polls came out on election night showing a heavy majority for the Conservatives, it was quite clear that the Brexit bill was going to pass without any issues and that we were heading for the next stage of the negotiations. But it created that level of political certainty that the UK has lacked for quite some time. But now we are breaking back below, or at least testing that 130 level from the upside, because of the latest noises coming from the Bank of England, because the prospects that we now have for an interest rate cut. As I say, markets are now pricing in a 60% chance, or a more than 60% chance, of an interest rate cut at the meeting at the end of this month. I do find that strange. Of course, this is susceptible to change over the next couple of weeks. I don't expect any data that we see over the next couple of weeks to be much better because of the proximity to the election and to Brexit, but we are likely now to hear from a lot more policymakers. We have to remember there's 9 policymakers on the MPC. So far, 2 have voted in favour of an interest rate cut. 2 have shown a willingness to back an interest rate cut, so that now leaves one swing candidate. Mark Carney has also suggested that an interest rate cut may not be too far away, but if we start to see a strong language from one more candidate or even more candidates about cutting interest rates at the end of this month, then that probability could raise significantly, potentially weighing on the British pound, moving towards a sustainable break of that 130 level. At that point, 128 starts to look a lot more interesting, but then we are back in 120 territory. So all of a sudden, the near term the outlook for the pound starts to look a lot more bearish.